Hello and welcome to the market update for Tuesday, May the 24th. As always, if you have any questions during the week or any that I don't get to during the class, make sure you send those to jerry@traderspro.com. Excuse me. And I truly mean that. If you have questions, make sure you send those to me. I haven't really had many questions during the last week, so just wanted to point that out. That if I don't want you, I'd rather have you asking me questions and keeping me busy than holding those questions in and then not progressing. Or it may be that I'm just doing such a good job in the class that you don't have any questions, but my experience is that that's usually not the case. But make sure you utilize that. Or if there is a question that maybe is a little bit more complex to type out or anything like that, then let me know ahead of the classes. At least try to make it a day before the class if you can, or a few hours before. I don't always check my email right before class, but send something, and I can maybe address it during the live class, especially if I think it's something that would be a common question that most people would have. All right, let's get started with the update. Obviously, a lot's been happening. A lot of whipsaw in the market, and what's been a little bit confusing the last couple of days is on Friday, actually started Thursday. I think I talked about this in the last class, that the market was flashing a little bit of a bullish reversal. We felt like it could rally a little bit, and it did start to do that. Well, actually, it started to sell off a little bit on Friday, but then reversed. Which didn't surprise me that it surprised me a little bit that it was selling off a little bit on Friday, but made a little bit more sense when it did reverse back up. And then yesterday we had the big rally. That made perfect sense based on what I was seeing in the price action and on the charts. But then today is throwing a little bit of confusion into the mix. And obviously the theme of today is the Snap report that came out, talking about their ad, they're cutting forecasts on ad revenue and things like that. They just reported earnings a couple weeks ago, so it's really kind of weird that this is happening right now. It makes you wonder if they were hiding something back then, or trying to maybe not have to report some of the stuff back then, or if conditions have changed just that quickly. I think that's the big concern for the market right now. That is the big concern for the market right now is, wait a second, we just heard from you a couple of weeks ago, either the economic conditions are deteriorating so fast right now that we're going to hear more companies coming out saying the same thing, or you guys were hiding something from us a couple of weeks ago. And so I think that's what the market's just freaking out a little bit today. But it's not freaking out in the sense that it's just selling off indiscriminately. I mean, it's going back and forth. We'll look at the chart here in just a second. But I had a question right before class here, was how do you manage stops on options in this environment? Now, this isn't an options class. I have an options class that I teach on Wednesdays, so that's a little bit more appropriate for that class, so I don't want to take too much time on this. But my philosophy with stops on options is I don't go into trades using option trades using a stop, because it doesn't take a very big move of the stock to cause a big move of the option. Now, we always think of that in a positive sense. It doesn't take a very big move of the stock for my option to go up 50% or 80% or something like that. We don't always think of it in the negative sense, that it doesn't take a very big move against me to cause my option to drop 50% or 80%. Now, options you can't go below what you paid for the options. So I go into every trade willing to risk the entire amount I'm putting into that trade. But if I happen to be able to see the trade is going against me and I could get out with a reasonable loss, usually about 50%. If I can get out with about a 50% loss, then I'll take it. If it's going to be an 80% loss and I've got time left on that option, I'll usually wait and see if it turns around and goes back up or goes back down, depending on if it's a call or a put. Anyway, I hope that answered your question. If you have want more details on that, and you're in my options class on Wednesday, pose that question on Wednesday. I'd be happy to spend a little bit more time on it in an options class. Most people in this class are going to be more looking for stock trades and maybe not even know how to trade options. So, all right. So let's get started with the direction alerts. Again, I've talked about this. We've started to focus a little bit more on the long-term signals here. We're starting to move to the left side of the bear market. I told you we're probably going to get into this extreme when we're near a bottom, when maybe that panic, it may not even have to have panic selling yet. We're gradually moving in that direction, but you'll probably see us get all the way down here, before we even start talking about a possible bottom. So just keep an eye on that. We're still not there yet. Again, in the context of everything, you can see that we really haven't retraced as far as we've dropped. We really haven't retraced a whole lot of this is the COVID low right here. We're still not even at 50% of that retracement. So there really is still a lot further we can drop. We've been dropping so steadily for so long that it's starting to feel like is this enough or isn't this enough? But I think that's what sets up for that shock when you see that Dow down 2,000 points one day, and you're like, holy cow, this is really, really getting ugly. Momentum, again, not in an extreme, could get even further oversold, but could bounce a little bit if the market rallies, could move in that direction a little bit. Brett is in the extreme, but it just barely entered that extreme range, could get more extreme as far as signaling extreme oversold. And we'll look at the market, the charts here in just a second to see, where the support area is and how are we holding that support area and things like that. Sentiment's still relatively high. This has got to come down at some point to where it comes off of that complacency. There's still dip buyers out there. Anytime the market is pulling back, they're still so conditioned to go look to jump right back in that they're really getting burned right now. I don't. Especially if you're a very short-term trader, I don't ever mind buying, getting playing a move up, because it could be a very short-term play. Some people, especially in my option trading, they'll say, how can you be bullish here? And my mindset is, I may only be bullish for 24 hours. Markets go up at times during the day. They go up at times within the downtrend. You can trade both directions if it's very, very short term. But if anything longer term right now, or even medium term right now, you really don't want to be buying dips or getting into any stock that's really trending downward as lower highs, lower lows. Now, obviously, we're in oil stocks and we do have long positions, but again, those stocks are acting like they want to go higher. They're acting like uptrends. They're behaving like uptrends, and those are the ones you'd want to focus on. Sentiment. So sentiment needs to come down. It's still they're still pretty high there. I'd like to see that come down a little bit. There's a question about you'll have to contact, if you can contact support for I think you can do it right on the website too to get signed up if you want to attend that options class. If you don't have the options class on your program, you can contact the office. I can give you more information on that too. All right. Buy-sell ratios, again, I've talked about this, how they'll start coming together, but what you're seeing is a lot of stocks that are going from sell to hold. You're not seeing a lot go from hold to buy. That's why this has come down quite a bit, and this is still just barely kind of moving up. Now that changes when you've been rallying for a little while, or you get we haven't even had really a more than a 2-day rally. So you get a 2 or 3 or 4 day rally, and you see this jump up pretty quickly. You'll see the buys, a lot of stocks going from hold to buy. But this is typical within downtrends. A lot of this width between the buy sell ratios is caused by stocks going into the hold, or going from hold to sell, and then going from sell to hold. This has been pretty steady down here, where there's not a lot of stocks that are buys right now. Very little stocks that are buys right now. In fact, you can see it in the internal data. You want to see how, and it is at a pretty extreme level, which you would expect to see with this much selling that's already taken place. But if you go into your index tab up here, the top, you can see the breakdown. Just taking a look at Russell 3000 is basically every stock that you want to be trading. You get below 3,000 or above 3,000, you start to get to the really small companies that you really don't want to be jumping into. But there's only 214 buys versus 928 sells, and then a whole bunch of holds right here. But the ratio is very, very low. Obviously, this could become even more extreme. We have seen it more extreme just a week ago, when that width between the buy ratios and sell ratios was really wide. We had seen a lot of stocks go from sell to hold. These numbers were a lot more extreme. But I mean, we're just obviously in a bear market. We're in a downtrend. We're in a bear market. These are the types of things you'd start to see in that type of condition. Now, going back to the buy sell ratio page, you come down a little bit lower here. This shows you the buy sell ratios of all the market, of all the stocks. And one of the things we recommend is, the process that we look at a lot of times when we're trying to find high quality. We're trying to find high quality companies in high quality sectors. I mean, the sectors that are moving and the individual stocks within those sectors. We're looking for stocks that have a 98 strength rank, or right around that as a starting point, or better. Or like I said, sometimes if I don't find any good patterns on the 98 strength rank, I'll drop down a little bit from there. I try not to go below 90. Because then that's telling you you're reaching. You probably shouldn't be buying a lot of stocks if you're having to go below 90. But that system where you're trying to find a new trade, you're trying to find something to get into, especially if you're trying to find something on a regular basis to get into, that system will work a lot better. Because remember, it's a trend following system. It can find you some trades that are trending up when the market's going down, but the question could be how long are those stocks going to continue to trend, or where do you want to have all your money in the market right now, or do you want to be maybe a couple stocks? We've been very cautious, had a lot of money in cash right now, but the system works a lot better when the buy sell ratios of the entire market are at least above 1. Here's one right here, and you can see that we're below that. In fact, if you put your mouse on where we're at right now, you can see where the ratio is. The ratio right now, it'll be as of yesterday, because remember, it updates overnight, is at 0.27. So we're well below 1. What that should tell you immediately is I'm not saying you can't find a trade, and if you want to have 1 or 2 stocks in your portfolio, that's fine, but you don't want to be loading up. You don't want to just load up even if you find those high strength rank stocks, you don't want to be loading up on them in that type of environment, because this is telling you that because the problem with that is that you're trying to find the 1 or 2 that are going to go the opposite direction of the market. And the market momentum is very, very strong. And especially when you get in these panic sell-offs, one of the things that you'll notice is that the best quality companies will sell off with the rest of the market. They'll have these big down days, and you're scratching your head saying, why are they selling off? They're not the ones that are in financial trouble or mismanage their balance sheets. But it doesn't matter. It gets caught. Everything gets caught up in that panic sell-off. And the opposite is true when everything's rallying together. The whole market is rallying. It doesn't matter. Almost doesn't matter what stock you pick. It's going to go up in value. So there is an element of trying to be in the river and going in the direction of the river. You don't want to be swimming upstream. And that's what can happen when you're loading up below here. Is you're trying to swim up the river. I'm not saying you can't do it, but chances of you succeeding for a long period of time is not the greatest. So you get up above 1 right here, and now at least you're starting to go with that current, and you're much more likely to get the positive results you're looking for. All right. And this sentiment indicator is it's off the extreme. It's not showing any extreme, meaning it could go either way in that situation. Let's take a look at the individual charts here. And you can see that we come off the lows of the day, which again does not surprise me, and wouldn't surprise me if the market shakes this day off a little bit and still tries to rally. What we were looking at Thursday, so we had this bounce right here that lasted a couple days, and then it rolled over, it came down. Now with that move right there, you get that type of a drop, you're expecting that you're going to head lower off of that, that it's going to start a bigger move. Here you had a rally, you had a big move down, you're expecting that to break below the previous support and drop. But then we had that bullish reversal candle right here on last Thursday. And what I talked about on Thursday was the possibility that, this could have been just wave A, this is wave B, and that we rally back up into this area here for wave C, and then maybe we roll over and have a bigger move down. Now we did, it looks very, after what happened on Friday. So Friday, what happened is we tried to open higher, tried to rally, it rolled over, and it looked like it was really going to take off to the downside. But it ended up, hold on just a second. It ended up coming off the lows. Now, I felt very strongly it was going to come off the lows, but because what the VIX was showing me that day was not the same as what the market was doing. So the market was dropping, but the VIX was dropping too. And so it was telling me that professional traders were not concerned about that reversal. He had just had a bearish reversal, tried to rally, and then rolled over. And you'd expect the VIX to spike up on that, and it wasn't. It was actually staying steady and going down a little bit. And I remember looking at that saying, I went short into this drop because it's probably going to rally into the close. And sure enough, we rallied quite a bit into the close. Setting up for Monday, which, figured, okay, that made sense. Had a bullish reversal. It shook off the bearish reversal day here. And then looked like Monday would rally, had a nice big rally there. And you're expecting to go right back up into this area. And this is the area you'd be expected to rally up into. Again, this day, if you don't have that day highlighted as a significant move, that day has been, well, this whole area right here is just critical. You've got to be paying attention to this rain area right here. Had a bullish reversal candle right there off the lows of the day. On this candle right here, we closed down here the day before, opened all the way down here, gap down, and immediately started rallying back up. Within seconds, we rallied up, telling me there's buyers right in this area. Rallied off of this, rallied off of this, rallied off of that. Now, this lower area right here had a little bit of support right here. It rallied off of that low. It paused right here. It didn't really hold right there, but it broke through that. Rallied up underneath it right here. We don't necessarily get too focused on exactness with these areas because although sometimes they will reverse at exact price points. But if you're constantly looking at that as maybe if you're an intraday trader, you're a day trader, you're going to look at exactness. But any type of position trader or longer term trader, you're not going to get too focused on exact price levels. But you can see it reversed off of that here. Kind of expected the same thing, to get back up in this area here and have it fail again. Although if it gets back up here and breaks these levels, then you have to rethink that and wonder if maybe there's a bigger rally underway. But these are key areas that you gotta pay attention to. And as of right now, you got to pay attention to right in this area right here too. That was the low back in here. We had that bullish reversal day where we kind of opened in this level. And then today we traded down right into this area here as well, and seems to be holding as support still. Now, that also means that if this doesn't bounce, we don't rally up into this area up here, if we break this, and I'd want to see it close below there, because too many of these moves have happened intraday where they've broken the support and they come right back up at the end of the day and get back above the support. And I tell you, I try to make the majority of my decisions at the end of the market day, because I can see how things are going to close. I always want to see how things are going to close. You know, this isn't specifically true, but it's generally true that amateurs tend to open the markets and professionals tend to close the markets. So you don't want to overreact a lot of times to where things are opening. It tends to be an emotional reaction to everything that everyone's learning before the market opens. You know, they turn on CNBC and they're talking about the Snap numbers, and for some reason, since they're the only person in their house with CNBC on, they think they're they think they're an insider with that information. They know something nobody else knows, and they go make an emotional trade right when the market opens. And a lot of times those people get burned. I like to see how things close. If it closes below this support area, then that would be very bearish, and could probably head lower there. But I've been watching the VIX along with some of these moves, because unless you're seeing some panic really kick in when you're dropping below these levels, we just haven't seen much concern. It's been just pretty orderly, and when you're in that type of an environment, you're always in danger of these little bounces that can take place. And I think we're still in a market where we could see a bounce happen, especially on a day like today when it's very negative out there, with, at least from what I'm hearing when I have the volume on CNBC turned up, the rare times when I have the volume turned up, there's just certain people or certain times of the day that it's worth my time watching CNBC. Most of the time, it's a waste of time. But there seems to be a little bit of this just lack of bullishness that you're seeing out there, and when the market isn't selling off in that environment right away, it means you're in a situation where you could bounce, because what can happen is all these people that are turning a little bit negative, the market starts rallying, and then, well, they're flip-flopping. They're not, if they can't read the price action, they can't read that so far it's not looking that terrible today, based on the price action and the chart itself. Those same people can flip-flop. If you have a nice big bullish day, they'll flip-flop right back to the bullish side, and emotions are just being swayed back and forth, because they don't have it anchored. They don't know what they're looking for. See, I'm not panicking right now because I don't see reason to panic. I don't see any reason to really be aggressive selling anything. Maybe on individual charts, we're looking at, I don't want to own Snap right now, but the overall market still looks like it's holding up okay. Now that could change, and Thursday I could be the biggest bear screaming to sell everything. But it would be because that's what the chart is telling me, and then that's what I need to do. So if you're having trouble, if you feel like you're having trouble with your emotion, every trader is going to have trouble with their emotions. Okay, let's just get that out of the way. Every trader deals with fear and greed. Every trader, the good traders try to mitigate their emotion, try to lessen the effect of that emotion on their trades. But I've been doing this for 25 years, and I still am affected by fear and greed. But I've lessened the effect through a routine, and I've tried to make sure that my decisions are based on what I'm seeing on the charts and not, what my emotions are telling me to do. But if you're trying to if you really feel like your emotions are out of control and you're getting whipsawed all the time, then you got to get really good at reading price action and reading the charts. And that's why we have these updates, is to teach you. It's repetitive. You hear me say the same things a lot of times, but it's to help you to see what's going on, so that you're at least reacting to something. You're not reacting to just pure emotion. And right now, I don't see anything yet that's telling me we got to panic. I mean, we opened lower. Here's where we closed. We opened lower, so that was bearish at the open. We did sell off all the way down here. So earlier today, you could have been a little bit more concerned because we're right at that support level. But as you come off those lows, that should lessen your concern that we're going to break that. And again, by the end of the day, maybe we're right back down here. Maybe we're breaking it, and you'd be concerned again. But at least you're letting the price action tell you, instead of just blindly saying, "Oh, the market's down." If you're looking at just the numbers on the TV, the Dow's down 200 points. That's bad. Well, not really. If it was down 400 points and it's only down 200 points now. So context is really important, and it helps you make better decisions when you understand what you're seeing. The Dow, all these others are showing about the same thing. Dow is trading, although it's down. This is what I was just talking about. Here's where the Dow closed yesterday. Here's where it opened. Here's where it hit the low, but it's actually trading higher than where it opened. It's still down from yesterday, so that's why it's showing a negative, down 100 points compared to, yesterday. But it's actually very positive that it's trading higher than where it opened. If it closes like that, that would be a bullish sign, very subtle. Not the strongest bullish sign, but it'd be a fairly bullish close there, and would look less likely that it's gonna go down. NASDAQ is what's getting hit the worst today, down 3%. But there again, look at the price action. It's off the lows. We do want to pay attention to that, the support area though. Now the Russell 2000 is the one that's the chart that is what's making me continue to feel pretty strong that we should still rally, or still have a rally in us. When I talk about the stair step, again, in the ABC pattern, you get impulsive. The step is the corrective move, wave A, wave B, wave C, and then you get impulsive, corrective. When you're going into a downtrend, it's just the opposite. You get impulsive down, and then you get wave A, wave B, wave C, and then you continue to drop. Now, I think I talked about this a couple weeks ago, but the wave B in a bearish ABC pattern, we call this a bearish ABC pattern because it's the correction within the downtrend. It's a rally within the downtrend, but it's setting up for a bearish move. So we call it a bearish ABC pattern. But the B wave in a bearish ABC pattern will tend to be sharp. But wave Bs are usually choppy or sideways. In fact, in a bearish ABC pattern, very often in the B wave of a bearish ABC pattern, you'll see a smaller bullish ABC pattern. It'll be choppy, and it just reflects the choppiness within that wave B. Now, these are general characteristics. It doesn't mean every ABC pattern will form this way, but and it doesn't have to be wave A, wave B, wave C. You can see sometimes you'll see wave A, and then wave B will just be choppy like this sideways, and then you'll get wave C. But wave B will tend to be more choppy. Well, if you look at, what I've been talking about lately is this possibly now being wave A, and that this is a wave B. You notice you can see that kind of choppiness a lot clearer in this IWM chart. The other charts have come all the way down to these previous lows. The Russell 2000 hasn't yet. I mean, it still could, but you're seeing a little bit more of that kind of opposite ABC pattern right there for wave B, and then I expect we'd rally up. You see it right over here a little bit. So here was the drop. Here's that bearish ABC, and then it dropped again. So I'm wondering if and we'd like to look at the Russell 2000 because it tends to be a leading indicator of the market. And so I think we'll see this. We might see this play out a little bit more clearly in the Russell. Now, if the Russell breaks that low, then you're in trouble, and you're probably heading lower at that point. And actually, that's the thing that was amazing last week was we saw I can't remember what day it was, but the market dropped. I think it was might have been Wednesday. On that drop on Wednesday, yeah, it was the drop on Wednesday. Almost all the small cap stocks had just been getting hammered. The Palantirs and the Robinhood and these companies have just been hammered. They all actually, a lot of them rallied that day or were flat. They just didn't drop. And so that was another thing I noticed, and I thought, well, that's interesting. That was one of the things that made me feel like maybe the market wasn't going to fall apart or drop right there, because you would have expected those to be. There's no reason to own those if the market's about to sell off. Those stocks aren't even making any money. And anyway, so keep an eye on that, Russell. See if it holds above that support level, and see if we have this again. If we have this last rally, you want to look at this area right here for it to maybe get close. Doesn't have to get all the way up there, but that's where the resistance is. Gets up into that area there, it should roll over, and then start moving down. So what would I do in our portfolio then? Well, if we do rally up into these areas, I want to stick with the oil stocks and the aerospace stocks, and those type of companies that we've been in. And then if it starts to drop again, we want to make sure we're hedged with some of those inverse ETFs that'll go up when the market goes down. And we'll look at those here in just a second. All right. Bonds. Now, bonds are interesting. I talked about this area right here as being a critical area. We've had lower highs and lower lows. And this was a lower low right here. I said right in this area right here, I said that's looking like that's now a higher low. We'll see if we break out to a higher high. And we're real close to doing that right in here. Now, I still don't look at this as a really strong looking bullish reversal. And here's why. A lot of times I want to see off of that low, I want to see a really strong impulsive move that looks like you're switching directions. I'll show you the dollar chart is a good example of this. So we'll look at that here in a second. Although it's reversing from an uptrend, and it looks like it's reversing from an uptrend into a downtrend. So one of the characteristics I look for a trend reversal is back-to-back. So in an uptrend, you'll alternate between impulsive and corrective moves. That's what creates a stair step: impulsive, corrective, impulsive, corrective. when you tend to reverse trend, you tend to have back-to-back impulsive moves in the opposite direction. You'll go impulsive up and then impulsive down, and then it switches. Now your rallies are your corrective moves, your choppy moves, and then your sell-offs are the impulsive down, and then corrective, impulsive. And then when you reverse from a downtrend into an uptrend, you go impulsive down, impulsive up, and then corrective. Well, if we would have reached down into here, and this was the lower high right here, well, actually that wasn't the lower high yet. So if we would have had impulsive down right here, and then we had impulsive up where we got right, we don't even have to go to a higher high, but just go up for several days where it's really looking like an impulsive move, and then it pulls back in a corrective move. Or if it does break to a higher high, that's a good thing, and then it pulls back in a corrective move and then gives you a higher low. That's a real good signal of a potential trend reversal. That's not what we have here. We had a modest move up, modest drop here, and then we've just been choppy. This looks choppy. This looks to me like it could just be another bearish ABC pattern. And then when it rolls over, we're going to continue to move down. Now that could change. I mean, it could suddenly take off and look impulsive. And if it did that, if it really took off and we got above this high right here, now you have to say, oh, maybe it's either a bigger correction. You know, sometimes after a big move down like that, you can get a big correction back up and then it goes lower, or you're dealing with a trend reversal. But this still more sideways behavior would indicate to me that it's probably still in this downtrend. I'd still want to see. I'd like to see it really start moving up sharply, and it just hasn't done that yet. Well, this is looking a little bit more. So this is looking a little bit more impulsive here. Maybe we're in a trend reversal on gold, impulsive down. This could be impulsive back up. Although gold's really erratic. I haven't really. Well, if you've been in these classes for a period of time, you know that gold seems to move without making any in a direction that doesn't make any sense at all. It'll look like it's trending up again, and it'll immediately reverse and go down. But if you've been waiting to buy gold, this is a pretty big pullback right here. This is looking more impulsive to the upside, so maybe that's at least an early sign that maybe it can start to rally here. I want to get to let's do oil here. Oil's, again, we're still in this sideways trend, but it's kind of a wedge. It's really getting compact here. It's getting ready. It looks like it's getting ready to break out. It should break out to the upside. So I'm still very bullish on oil. And here's the dollar. So this would be the opposite. So again, here's impulsive. Here's corrective, more choppy, more sideways. There's impulsive. Here's a little bit of a sideways correction here, and then you had impulsive up, impulsive down, and you went to it. And in that impulsive down, you had higher highs, higher lows. You went to a lower low right there. So this is looking like a trend reversal. Now, there are times where you just get a drop like this and it goes right back up again. I mean, I'm not saying that's not possible. Now, what would strengthen the case of a bearish reversal and a new downtrend in the dollar would be, how does it look on the next rally? It should look choppy and sideways as it tries to rally, and then it rolls over. You should get that kind of a step. So this looks impulsive. You're looking for a corrective as it rallies back up, and that would tell you, hey, dollar's probably more likely to go down. So we'll keep an eye on that, but it's looking like a trend reversal right now on the dollar, and it's acting like it's reversing that trend. We'll see if that continues. And by the way, when we're looking at these trends and we're looking at these charts, we're not. I think this is very important to point out. I've said it before, those of you who've been around, but we're not trying to be psychics here. Okay, we're not trying to be Nostradamus here. Now, some of you are trying to do that because you want to brag to your friends, you know, and it makes you look smart. You want to go brag to your friends. You're going to go tell them, oh, the dollar's going to drop. You watch. But our job as traders, all we want to do is get the trend right. All we want to do is make money. We don't care, but to do that, we got to forecast. We got to see how is it acting right now. How's the market acting right now? What direction is it moving in? Because if it's moving in a particular direction, it's more likely to continue to move in that direction. But I also got to get really good at recognizing when it's changing, when it's not acting that way. If suddenly the dollar starts having an impulsive move up, it starts going up, 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 up for several days in a row, and now you're beyond here's a halfway point of that drop, and now you're above the halfway point and you're going up strongly. I got to be willing to say, oh, maybe we're not reversing right here. It's starting to act like it wants to go up again. Can I switch my mindset to immediately turn bullish on it? Can I do that? If you can't do that, then you're going to struggle. I mean, I drive people nuts a lot of times in these updates because it can happen during the week. I could be really bullish on Tuesday, and then something happens, and it's like I am bearish as can be on Thursday, and people are like, well, sometimes I've had angry emails on that. Well, Jerry, can you make up your mind? This is confusing to me. Well, it's only confusing if you're expecting the market to behave rationally and to be able to think that we can know exactly what it's going to do. That's not the skill. The skill is being able to change when it's telling you to change. Now, what I'm trying to do in these updates is teach you what to look for to recognize those changes. And this basic kindergarten stuff right here, the stair step. Oh, we're doing the stair step again. Jerry's doing the stair step again. You got to get this stuff down because this is the general behavior. This is how we recognize potential trend reversals and how we know when we need to switch. Right now, you've got to switch from being bullish on the dollar to bearish on the dollar until it tells you differently. And then when it does, you got to leave that behind and go bullish on the dollar again. You got to be able to flip flop. I used to say, flip-flopping in politics is deadly, but flip-flopping in the markets is essential. You've got to be able to flip-flop in the markets, And but you're not flip-flopping because your favorite guy on CNBC is flip-flopping, or they're scared one day and they're bullish the next day. You're actually you are reading what's causing you to be more bullish or more bearish or to switch the direction. You're reading it on the chart yourself and the price action. Okay. All right, VIX. So this was what was happening. Hold on. So you're seeing this whipsawing in the VIX even right now. Look at this drop, this move up, this drop, this move up. When you start to see that type of volatility, I mean, these are big moves. This is not a real. This is a little whipsaw back here, but it's smaller. Here's a little whipsaw back here, but it's smaller. These are big moves. When the market is really volatile like that, it tends to be bearish overall. Okay, that's why, although the near term I think we could rally a little bit, I don't think it's going to last. I'm just expecting maybe a bounce right here. We're still heading lower based on what I'm seeing right here. This type of volatility is suggesting this market is still going to be dropping. That tends to be very bearish. Now, that could change again. What if this really starts calming down in the next few days and now you're seeing these smaller moves, or it's dropping? You'd see it drop steadily. You see how it made these big moves down, and this was a big drop in volatility. And then the market was rallying right through here, and then it started to drop slowly. That's when it's still rallying, but it's calmed down. The market's calmed down a little bit. That would tend to be more bullish. You're seeing these smaller, you're not seeing a lot of back and forth movement. You're seeing kind of a smaller moves down. That tends to be a little more bullish behavior on the VIX. But so you would expect the VIX to be up today, right? Because the S&P is down. The VIX should move in the opposite direction. But I would expect it to be up. If I thought the market was really concerned, I'd expect it to be up here at the highs of the day. Here's where the VIX opened, and we're below where it opened. Now we're still higher than where we closed yesterday, but we're trading lower than where we're open. So if someone gets on TV and they're starting to talk about how that snap news is bad and the market is really, it's down today and it's terrible, this is gonna fall apart right here. I'm not. Remember what the VIX is showing. The VIX is telling us. My layman's definition of the VIX is, it tells you the level of freaking out by the institutional investors. These are the people that are moving the market. I want to know, are they freaking out? Are they concerned? I don't care what Joe Schmo on CNBC thinks, unless he's one of those institutional traders that's moving the market. But then I think he's got an agenda if he's appearing on CNBC. No trader wants to tip his hat on what they're doing unless they're trying to convince you to to do something that's going to help them and hurt you. Anyway, but they're not showing me a high level of concern right now. They're not freaking out. Now, again, this could change very quickly. By the end of the day, you see the VIX spiking up all the way up to here. Okay, now they're freaking out. Now I need to be worried that we're going to head lower. But I'm not seeing it yet on the charts. All right, chip stocks. Again, they're still in decline. These tend to be a leading indicator. They're down a little bit today, but they're not down below their lows yet. We'll see if it is still lower highs and lower lows, though. If chip stocks can rally up above that high, maybe if we really want to know if the market rallies and we really want to know if it's a short-term rally going to roll over, are the chips leading the way? If you have an update in the market and the chip stocks are up if you have a big update in the market, the chip stocks are up just a little bit, or they're lagging, they're going up with the market, but they're really lagging it, then that tells you that it's probably short-lived. If you see a strong rally and the chip stocks are participating in it, and they're the ones leading the way, if everyone's talking about chip stocks, or the sector today that's really moving is chip stocks, then that's a pretty strong bullish signal. And that's something you would look for, because it tends to be a leading indicator. Same with the transportation stocks and the Dow industrials. Transports are looking really weak today. That doesn't mean the market will drop immediately if the transports go lower, but it's a signal that it's probably eventually heading lower. And so that until you start seeing the transports really bottom out and start trending up, then you're expecting that the rest of the market is going to remain bearish. And then Bitcoin's just kind of flattened out right here, although the previous move was down. Remember, you hear me say, whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. That's where it's more likely to go once it's done moving sideways. Now, the key there is when it's done moving sideways, sometimes you get a little rally. You get these sideways moves, you get a little rally, and then it drops. Same with the upside. If you see a stock moving real sideways like this, a lot of times it will eventually go higher, but sometimes you'll get a dip down and then it'll take off. It's almost like, because the sideways move is showing the buyers aren't wanting to buy and the sellers aren't wanting to sell. And it's lasting a while. That's why it's been going for a while. And in order to shape that, you've got to have a break first. Now, because of the previous move up, you're expecting that eventually that move will go higher. But a lot of times to jumpstart those buyers, they're just probably waiting for a better price. And so it dips down, it sells off right here, and then those buyers suddenly, they come to life, and then they push it higher at that point. doesn't have to do that, but that's what happens a lot of times. You'll get a little dip down and it'll take off. And this sometimes tricks people because they say, oh, what, it was trying to go higher and then it dropped. I better short it right here. The sellers are now in control, and that's very short-lived. They get crushed when it rallies right back up again. So, and sometimes, now don't get me wrong, in a downtrend, sometimes the opposite, sometimes a sideways move can be a form of a base, but you want to see a big, so if I get a big decline in a stock and then it starts moving sideways, I don't always necessarily believe it's going to go lower if it's had a big drop. Because sometimes in a downward trend, you get the big drop, and sometimes you can move sideways, but it actually is a basing formation. And you see me talk about this all the time, that bowl-shaped move. I like to recognize these bowl-shaped moves, but they usually come after a big decline. You get a big decline, and then you move sideways, and then you start to move back up. I love trying to get in when on the right side of these bulls because they tend to work, but they tend to work in bull markets or in bullish trends. A lot of times these will have a tendency to fail in bear markets or bearish trends. But I want to point that out because not every time when you see a drop in a stock moving sideways does it mean that you're going to go lower. Now, you don't typically see these at a top. So, I talk about sometimes, you've been trending up and then you start moving sideways. You're usually going to break out of that and go higher. Now, maybe barely higher. You might barely break out of that and then reverse. Most tops tend to be pointed. In fact, but they don't always have to. But I call these, when they do move sideways like this and start going down, I call these volcano tops because they look like the top of a volcano. They're very rare. They don't happen very often. So if I've got to pick, when I see a stock in a nice long uptrend and it's been moving sideways, what's it more likely to do? Is it more likely to have a volcano top and drop, or is it more likely to break out? It's more likely to break out. That's the higher probability move. And that's what I would be trading or expecting it to do. Now, like I said, after a long upward trend, you have to wonder, why is it moving sideways for such a long period of time? That's showing indecision. It may just be that it barely breaks out and then reverses. So you might have got that move, that breakout move, but it might not last very long. Typically, I don't like to stocks that make too long of a move sideways after a big run up. And we're seeing that a little bit with oil. I mean, I expect oil to break out. Let me bring that chart up again real quick. But this is a good example of that. It should break out, because if it were to drop right here, that would be a volcano top. But it may just be that we break out and then reverse and then go into a bigger correction. But since I feel strongly it's going to break out, I'll wait till it breaks out. Now, if it breaks out and then we get into this extreme reversal risk, which we probably would if it did it right here, we're very close to that. We get to the far right side of that extreme reversal risk. Then I want to tighten up stops. Where could you tighten up stops? Any of these previous lows can be stop points. I wouldn't have a tight stop here, because it could still come down into this area. It could still stay in the sideways range a little bit before breaking out. If you're really giving oil a chance to move, you probably your stop down here somewhere, where you're out of this congestion. You're not going to get bounced out of the trade off of that congestion. Once it breaks out, you can start using these previous lows as stop points. So if it breaks out of here, that'd be a good stop loss point. It comes back down to a lower low right there. It comes back down below that low. You take your profits. All right. I spent a lot more time on the market update today because I really don't want to recommend new trades aside from the ones that we're already in or trading. These all look still good. If you're looking for ideas, NOC is this could be breaking out here pretty soon. Nice move today. We're kind of waiting for it to break out of that range. By the way, I saw a story on this. And again, I'm going to go with the trend. Okay, the trend is always going to be my main reason for my decision. But there is extreme demand right now for weapons, and there's going to continue to be extreme demand. There are countries like, take Sweden, Norway, and Finland right now, who traditionally have not really loaded up on weapons because they tried to stay out of a lot of conflicts. But after seeing what happened to Ukraine, they are now putting in orders for weapons. You've got the weapons that are going to Ukraine. All these countries are giving weapons to Ukraine because they need them right now. Well, guess what? They're not going to now not be stockpiled. They are going to replenish those stockpiles. In fact, that's why they're giving them the weapons, is that gives them a reason to get new ones and better ones, okay, upgrade their weaponry. And there's only a few companies out there, and most of them are U.S. companies that provide these weapons. This is just starting a bull market on the defensive stocks, in my opinion. And from a valuation standpoint, which is not my area of expertise, but from the experts that is their area of expertise, they say these stocks are still very cheap and they're very undervalued, or at least fairly valued, and have potential to really take off. Now, what could prevent that a little bit in the near term? Well, economic conditions, because when economic conditions are bad, people aren't really wanting to buy strongly. But these are likely to withstand a lot of that. And I mean, look at how far the market has dropped and how little Northrop Grumman has dropped. I mean, it's held up pretty well. So it's kind of moved sideways through here. Now it's starting to take off through here. So where do you find these? If you go under sectors and under aerospace, now there's some of them that are that are sells right now, but again, you could wait for these to go back to buys. You don't necessarily want to buy something that's dropping, but Raytheon is a big one. They're the ones that have all the missiles. They pulled back recently quite a bit, but they have a sell right now, but they're likely to they're one of the main ones that I would think would, because we know what weapons that they're the ones everyone's talking about right now that people are using. General Dynamics. And the nice thing is you can stick to these bigger names, these well-known names. You don't have to take a chance on some of these that I don't even recognize. I think you make plenty of money with General Dynamics, L3 Harris, LHX, Lockheed Martin. Textron is a pretty well-known one. I mean, some of these have lower strength ranks right now, but these are in the 80s. These ones up here, General Dynamics, Raytheon. Anyway, just an idea. I'm not, again, if you look at the charts, they're, like I said, they'll have sell signals, or they're going back to holds. Some of these are going back to holds. But this one looks really good, Lockheed Martin. I mean, even though it's gone to a sell signal, again, overall, it's been just kind of consolidating, moving sideways. It's at the lower end of that sideways range. Now, remember, I think it's important to remember, I got to wrap things up. I know it's top of the hour, but the signals are designed for people that don't want to think. They don't want to read a chart. They don't want to, they just tell me when to buy and tell me when to sell. That's all I want to know. I don't have time in my day. That's what it's designed for. These algorithms are designed for that person. Now, I assume if you're taking an hour out of your day or more, I'm going overtime here, to listen to me talk, that you're probably wanting to learn how to do that you do want to learn how to read a chart, that you do want to learn about reading price action, you want to learn how to read a trend. And if you are willing to learn that, you have an advantage over a signal, okay? It's just true. I don't know how you can think anything different. Someone that's willing to spend years learning how to read a chart, that they don't have an advantage over a person that just wants to buy. So green means go, red means stop. You can have an advantage. For instance, right here, we're barely getting a hold signal right here. All day long, I would buy on that nice bullish day right here, put a stop down below this lower range right here. If I'm wrong, I'm only losing this much. If I'm right, and we should break out of this sideways move, and I have that potential to make this much or more if I'm right, and I lose this much if I'm wrong, I'll do that all day long. So if sometimes I pull up a chart and it doesn't yet have a buy signal, and I say, boy, or I might even get into a trade. I did that today. I got into ADM, or was that yesterday? It might have been yesterday. Yeah, I actually got in yesterday. So I got in on a sell signal. I've got a stop right below here. It's a tight stop because I figure if this isn't done going down, it looks like it's corrected a nice ways. A nice bullish reversal candle right there. If it doesn't work out, I'm going to lose this much money. If all it does is get back up to this previous high, I'm going to make this much money. It could go higher, and I'd probably let it go higher. I have a chance to make a lot more money if I'm right than I'd lose if I'm wrong. And when I hear a story that the world reserves in wheat, the world has about 10 weeks of wheat reserves, and the fourth leading producer of wheat is at war and all their production is shut down. Now, obviously, I'm going to go with the chart, but I've done that. Here's what I'm willing to risk, that agricultural stuff is going to rip. And here's my potential reward. Now, again, maybe I'm early and maybe I'm wrong, but that's what I'd be willing. I understand my trade. That's what I'm willing to do. If you're not comfortable with reading that and making that decision, you can wait for a few more days for this to go back to a buy signal, but your buy signal is going to probably show up right in here. And I'll have made $5 before you get in, and then you could break out and go higher. But I just want to point that out because I don't want you to feel like you have to be locked into the signal. And I'm only saying that because you're here in this class, and I assume if you're here in this class, it's because you want to learn how to be a better trader. You want to invest some time into learning how to be a better trader and to be able to make some of these decisions before the signals happen. And so I just want to make that clear, so that you don't, if you say, wait, Jerry, it's not at a buy signal yet. You don't always have to wait for that. If you know what you're doing and you know how to read what you're doing and you have a plan, I definitely have a plan on this trade. And many of you have been around for a while. You know that I've gotten into trades like this and they've immediately gone down. I've stopped out. It didn't work. That's okay. I don't care. Because in the long run, I know if I keep finding these situations where I don't lose very much when I'm right, but I make a lot, I don't lose very much when I'm wrong, but I make a lot when I'm right, I'm going to be fine. All right. Let's get you out of here. Question, would you not get? Would you not, or would you get into NOC now, knowing that May 27th is a dividend day? You could. I don't normally base my, I'm not a big, I'm not, I don't normally make my decisions based on dividends. But if that's a reason to get in now and capture the dividend, then yeah, there's a bonus right there. All right. Thanks everyone. Have a great week. We'll see you on Thursday for the stock specific class. Bye now.